Okay,
I'm going to mention that it's recording as well in my opening spiel.
fantastic. Okay, so it should become live now. In 1 minute's time, the attendees will be joining, and you guys can begin.
Thank you.
I think people are joining as we speak. I'll kick off at 10, but I'll let the virtual doors, who say have opened, so I'll let them continue.
There's more than 2 people joining anyway.
So Dee Moran is joining us now also.
Wonderful. Thank you very much.
Thank you.
David breathes a sigh of relief.
What a busy week it's been for Climate Finance Week.
Really has.
Good morning, Dee. We're
Morning,
live.
Dee.
Hi, everybody. Good morning.
Hi, Dee.
So I've got participants already joining. So what I was planning on doing is kicking off on the hour of 10 to allow people to continue to join. I think there's a number of online events today. I'm not sure if there's events in person. But this, I understand, is the Practitioner's Day for Climate Finance Week.
Okay.
Which is why we've traditionally been, Chartered Accountants Ireland have been part of this day for the past few years. And but this is our first day having this session on a Thursday, which is a small point of interest.
It's normally a Friday, isn't it?
Normally a Friday morning. But I am going to start this now because it's 10 o'clock. So I'd like to welcome everybody. Good morning. Welcome to this webinar on the Corporate Sustainability Reporting Directive and its implications for SMEs in value chains. My name is Susan Rosney and I'm Sustainability Officer for Chartered Accountants Ireland, where I lead on sustainability advocacy and communications for the Institute. As we mentioned, this is our 4th year partnering with Climate Finance Week Ireland, and I'm delighted to be back on what is now a vital week in Ireland's sustainability calendar. Today, we're taking a look at the Corporate Sustainability Reporting Directive, or CSRD, from the perspective of SMEs in value chain. With effect from financial year beginning on or after the 1st of January 2024, companies in Ireland will begin reporting under the CSRD, and as a result, the European Sustainability Reporting Standard, or ESRS. While most people understand that the CSRD will apply to larger companies, at least initially, the requirements extend beyond the scope of the reporting entity. This means that companies in the value chains of in-scope companies are also affected. Building on the concept, you're in scope because they're in scope, our speakers today will discuss ways for SMEs to prepare for the potential impact of the directive. This will be followed by a panel discussion on how financial services is transforming its own environment, social, and governance profile, and the impact this will have on customers along the value chain. Our panelists are Donna Wilson and David Connolly. Donna joined AIB in 2001, and her career has spanned a number of business areas. These include Group Internal Audit, AIB, UK and Retail, where she has held a number of roles, including Head of Audit AIB UK, Head of Customer Advocacy AIB UK, and Head of First Line Governance Retail. Most recently, Donna has taken up the enterprise-wide leadership role of Head of ESG Transformation and Reporting within the AIB Group. David Connolly is a Fellow of Chartered Accountants Ireland and is Senior Manager of a specialised team within EY dedicated to helping companies in the financial services sector navigate the complex world of climate change and sustainability. He's currently leading CSRD engagements, which include double materiality assessments and the basis of preparations on behalf of regulated clients. This involves a deep dive gap assessment across identified topics and subtopics related to CSRD. Before we join David and Donna, though, I'd like to introduce you to my colleague in Chartered Accountants Ireland. Dee Moran is a Fellow of Chartered Accountants Ireland, and she has significant experience in both practice and industry. The professional accountancy team, which Dee leads, is responsible for a broad technical policy agenda that's of relevance to the Institute and its membership. It works to coordinate policy approaches and develop guidance for members. Dee also leads the Institute in the area of sustainability reporting, including responding to consultations. Before I hand over to Dee, I'd like to remind you attendees that you can ask questions using the Q&A function, which I'll be monitoring throughout the session. And please note that this webinar is being recorded. Now it's over to Dee to talk about CSRD and the ESRS. I will be sharing your slides, I think.
Great, that's great. Good morning, everybody, and many thanks, Susan. And in this session, I'm just going to give a really brief outline on what's happening kind of in the build-up to the CSRD before we hear from David and Donna. So,
they're coming. Sorry about this.
Okay. So just a little bit of background while the slide is coming up. I suppose if we go back to 2015 saw the Paris Agreement that was signed at COP21, and the pledge was to limit the global temperature to a maximum increase of 1.5 degrees. And this was signed by 197 countries, and it is reviewed every 5 years. Following on, then we had the European Green Deal. This was approved in 2020, and this is essentially a set of policy initiatives by the Commission, which is the overarching aim is to make the European Union climate neutral by 2050. And there was also a plan in relation to the EU greenhouse gas emissions reductions target, which was that by 2030, at least 50% and towards 55% of greenhouse gas reductions compared with 1990 levels. And then there was also a plan to review other existing laws and to bring in new legislation on the circular economy, building renovation, etc. And we really are starting to see some of those come through. Then just bring it down to Ireland, and the Climate Action Plan was launched in 2021. This had the aim of a 51% reduction in greenhouse gas emissions by 2030 and net zero emissions by 2050. And we had the Climate Action Plan 23, which is the second annual update of that, launched earlier this year. And I suppose I think the question really is, I think everyone is seeing how it's going to be a challenge to meet those 2030 targets. Next slide, please. Thank you, Susan. So due to the significant growth really in stakeholder interest in sustainability information, I think we really, over the last number of years, we saw several standards and frameworks which came up, which to assist companies to measure and to report. And I think this slide just kind of gives an idea of the sheer number, and this isn't all of them, of frameworks and standards that there are. I won't go through them, but I think the more popular ones certainly in Europe are like the TCFD and the GRI, the Global Reporting Initiative. But really this, as they call it, the alphabet super frameworks, this created a lot of difficulties, particularly for businesses that operate internationally and who are affected by more than one regulatory and legal jurisdiction. So there were calls from many stakeholders to try and get greater coherence and consistency and comparability, and therefore to have more convergence between the different standards and frameworks. So next slide, Susan, please. So in the last couple of years, this is where I suppose we have landed. So on the EU side, I've just talked about very briefly about the EU Green Deal, the CSRD. I'm going to chat about shortly. You also have the SFDR, which is this imposed mandatory ESG disclosure obligations for asset managers and other financial markets. And the EU taxonomy, which is the classification system establishing a list of environmentally sustainable economic activities. So kind of a common language for everybody, really. In the US, then, we have the Security and Exchange Commission. So they're looking at this climate change disclosures. They have been delayed. I saw a thing on Reuters in recent days that they think that even some of the more demanding greenhouse gas emission reporting requirements that were on these may be scaled back. So I think it'll be interesting to see what will happen in the US. In the UK, then, we have the FCA requires companies who are UK listed to complete mandatory annual TCFD aligned climate disclosure reporting. There's also the SECR, which is the streamlined energy and carbon reporting, again for large companies. And I think that we will expect that they will endorse, the UK will endorse the ISSB at some stage in the future, probably in the next number of months. I think we'll be hearing more about that. And then at a global level, the IFRS Foundation have set up the International Sustainability Standards Board, and they have now issued two standards, S1 and S2, which is a general requirements for disclosure, and S2, which is more focused on climate, and they are currently looking at where they will go next. So if we just jump to the CSRD then, this is just a very brief overview. Essentially, CSRD replaces the non-financial reporting directive, which has been in since 2014, and this will apply to about 50,000 companies versus about 11 for the NFRD. Just on the scope of the reporting, it is forward-looking information, which is new. It introduces the double materiality concept, and essentially this means, that companies not only have to report on how sustainability issues might create financial risks for the company or financial materiality, they also have to look at the company's own impacts on the people and the environment, or impact materiality. It also talks extensively about the value chain, and we will be hearing a lot more from David and Donna on that. And reporting is in line with the EU taxonomy regulation. Underpinning this, EFRAG have published 12 European sustainability reporting standards. I will just go through those briefly in a couple of minutes. They kind of underpin everything on it. So you'll see then there who is in scope for it. I think this is very short. There is a wider, and I will direct you to some guidance at the end, which will show this. In terms of third-party assurance, then it will be mandatory for the first time, limited assurance initially, and then moving on to reasonable assurance at some stage, and then there will be additional training and that required for auditors. So And reporting then will be in the XHTML format. So if we could just move to the next slide, Susan, please. Okay, so in terms then of in terms then of the ESRSs, sorry, I've just lost my place there, sorry. So in terms then of transposition, so work is ongoing to bring the CSRD into Irish law. And this has been done by the Department of Enterprise, Trade and Employment. And they consulted on this earlier in the year, and there were 16 member state options open for consideration. So just some of the key options on that: one was to exclude commercially sensitive information in certain circumstances. And then there was one to allow a sustainability auditor to be separate from the auditor that would prepare your financial, that would audit your financial statements. And there was also an option to allow for independent assurance service providers. So we haven't seen the transposition yet. From what we have seen, the first two options will be allowed, and the third option will be looked at, and this will, it is expected that this will be consulted on in 2024. Next slide, Susan, please. Thank you. So just very briefly on the ESRSs, so there are at the moment 12 standards. So these contain 1,178 data points, and there are 90 disclosure requirements. There's a lot of information in here. So there are 2 cross-cutting standards which apply overall, and then you have 10 topical standards. So 5 for the environment, 4 for social, and 1 for governance. We are expecting to see additional standards in the future. There are 40 sector-specific ones. These were meant to be worked on. We were meant to see them, but they have been delayed so that there can be further work done on the topical standards. We will also see SME standards listed and voluntary. There is actually a draft of these just out, so I think we'll certainly see an approved version of those shortly. And there will be standards also for non-EU groups. Next slide, please, Susan. Thank you. So just to finish off on this part then, where does this leave SMEs? Well, I think SMEs are voluntarily reporting on a lot of their sustainability initiatives. And, you know, a lot of the reasons for that are customers really demanding it. Important, particularly with the younger folk, to retain and attract talent. You know, there is the potential for additional funding opportunities from both the EU and local sources if you are able to show your sustainability credentials. And also, given the CSRD, if they're part of a value chain, and this is becoming increasingly more important for companies that do supply companies that are required to report under the CSRD. So with that, and to hear more about it, I am going to pass over to Susan for our Donna and David chat. Thank you.
My screen is frozen now. I'm not sure if everybody else's has. Hello. Hello, my screen froze there for a moment. I'm not sure if that happened for everybody else, but certainly I missed the very last moment, but that was absolutely fantastic. Thank you so much, Dee. I stopped sharing the slides, but I will come back to them because there was a final slide of useful resources as well. Particularly the one I point to was Dee's slide on Dee's mention of the CSRD questions and answers, which is a very succinct description of the CSRD and the ESRSs that's available on the website, as well as resources available from AIB and ESB. Beg your pardon, from AIB and EY. I moved you there, David. So what I'll do, if that's okay, I'll get these circulated to the people who've attended this call, and they'll also be available on the website, and I can share the screen at the end. Thank you very much indeed for that. Dee. We have the panel discussion now with Donna and David. And I've already had a question coming in from the audience, which I will get to shortly. But I did want to ask, though, on the topic of the value chain that's arisen. David, is there a particular type of kind of member of the value chain that needs to be cognizant of the requirements of the CSRD, or what exactly do we mean when we talk about the value chain?
Good morning, everybody. Thanks, Susan. I suppose when we think of the value chain, we think of kind of upwards suppliers and downwards customers, and that's kind of it at its very simplest form. But the CSRD and the ESRS ask us to go beyond that. So it asks you to look at your internal and external stakeholders. So your internal stakeholders, which are within your value chain, would be people like your employees, your board, your management, and then external stakeholders, in addition to customers and suppliers, would be things like investors, the regulator if you're in a regulated industry, and also trade associations and community groups. So if you're in a business that you touch off communities, so you would use them as part of your participation and as you go out to your value chain as your process. I suppose if just to bring it to life, financial services would be my sector, but given it's Practitioners Week, Susan, it's probably, people are probably more interested in general industry rather than the financial services sector. So if you could just bring it to life, I suppose, in terms of a business, if a large food manufacturer was trying to define its value chain, it would be looking at all of those things, like its customers, suppliers, but also be looking at its bank. If it's getting debt finance, it would look at investors if it had equity finance. And I was thinking about it yesterday. So if you're a big food manufacturer, you might have a grant from the IDA. So the IDA would be one of your stakeholders because you've got grant funding from them. And then your suppliers would be the suppliers for all the inputs into the product you're making. But it could be broader than that. So, for example, if milk was one of the inputs into your manufacturing process, the people who produce the milk are going to be part of your value chain. So the farmers would be in your value chain. Now, you wouldn't engage with each and every farmer in the country that's producing milk, but that, I suppose, brings it back to the trade association. So you might engage with the Irish Farmers Association. So whatever industry you're in, it's going to be different. I think, I suppose, as we're all a lot of accountants on this call, we look for one size fits all, but unfortunately it's going to be different for different industries, and even within different industries you're going to have different parts of the value chain.
Mm-hmm. Yeah, definitely one size fits all is the opposite of what people are reporting back about this experience.
Absolutely.
Another one I hear a lot is it's not one and done. So it's not something that you can prepare for and then bank that as being done. There's an awful lot more to it that's kind of iterative. But actually, on the subject of somebody who's in an organization that has to report against this, Donna, AIB is in scope of the CSRD. And so what are you doing in terms of it? Do you see this as a compliance burden, or is it an opportunity? Because we also hear a lot about the opportunities that the CSRD is presenting, although it might not feel it when you're trying to set up a CSRD instance or do the heavy lifting there.
Thanks, Susan. And yes, good morning to everyone who's joined us in the webinar this morning. Yeah, it's a great question, Susan, and one that I'm sure has come up many times. And look, the short answer for me is that I do see it as an opportunity, but it has absolutely got the challenges that come with it as well. But don't we all love a challenge? So for context, and I'm sure everyone on the call is very aware, but AIB has identified sustainability and the broader ESG agenda as a cornerstone of our strategy. So obviously, we had the sustainability conference at the beginning of Climate Finance Week, and we really set our ambitions. We know our role, and we pledge to do more. So we all know that managing climate change is probably the most important challenge facing our generation, and the role of finance and the role of AIB in supporting that transition to a low carbon economy is pivotal. So anything that can help us support our customers in the transition, we have to see that as an opportunity, and we absolutely do. But in terms of CSRD itself, I guess we absolutely welcome the directive and all of the requirements that Dee has already taken us through. So we've been reporting on ESG requirements on a voluntary basis for a number of years at this point. And again, D referenced the alphabet soup, the GRI, the TCFD, the CDP. And I guess what CSRD brings, and what we would all agree up until now, there's been a lack of unification, there's been a lack of commonality, and even the slide that Dee shared with all the different types of reporting that we have. So with that standardization comes greater clarity in terms of both what we need to do, but also from a comparability perspective. So how do we compare? So from an internal perspective, it allows us to compare more easily, and that of course promotes greater ambition internally as well. But also, as David has talked about in terms of stakeholders, from an external perspective, it allows the regulator, our customers, our investors to equally have that clarity in terms of comparability. David also mentioned indeed the double materiality assessment, and we've just come through our own double materiality assessment, and it really does drive out what is material to the organisation, not just in terms of the regulatory requirements, but also what's of strategic importance and what's the ambition. So that's the positives, Susan. But I did say there was challenges, and again, it links very closely to what Dee was taking us through earlier. It's the breadth of not only CSRD, but all of the other reporting standards that we have, like EU taxonomy, for example. And having to manage all of those requirements has been a challenge even for the largest of organisations like ourselves. I do think there'd be benefit in having clearer guidance, pardon me, and how best to interpret, navigate, translate those standards. But I completely acknowledge our own role and our own obligations, as a financial institution. So as Dee had mentioned earlier, we don't yet have those sector-specific ESRS, and that would really help to have the sector-specific too. And I guess the other challenge is the pace of change. And again, I'm linking back to what's already been said. But if you think about it, probably even 5 years or certainly 10 years ago, we didn't have the same level of ESG reporting standards. And look at where we are today. Look at that slide that I think is super from Dee. So you compare that and compare it to financial reporting standards and the many years it's taken us to implement and embed those. It certainly gives the sense of the scale and that pace of change. So conclusion to your question and a short answer, it's definitely an opportunity, Susan, because it gives us that reliable and comparability, and that definitely has both regulatory and strategic advantages, but it definitely has its challenges as well.
Yeah, and you mentioned one of the challenges is the amount of data and the breadth of it, rather. So one thing I hear a lot about is 1,100 data points. And that's 1,100 data points. Is it under the standards, or presumably it's under the standards that no, I'm guessing not every single one of those is going to apply, but it's not a small matter basically for organizations to do it. And you said even for the large organizations, this is a significant bit of work. For the SMEs then in the AIB customer list, when they're themselves not in scope, but they're obviously in the value chain of reporting entities, what's AIB doing to support them?
Yeah, no, again, look, and if we look at it, I suppose, at a macro level, first of all, so, AIB is a relationship managed bank. That's what we do. And we're absolutely committed to supporting customers, including those SMEs. And one of the key ways, practical ways that we can support customers is through our climate action fund. So again, you'll probably have seen this over the last number of years, but our ambition is for 70% of our new lending to be greener transition by 2030, which is underpinned by CSRD in terms of regulation. But we have a 10 billion climate action fund target, which we're on track to meet at the end of this year. And that's a key enabler of that ambition, which then links to CSRD. And in fact, on Monday, we announced an additional 20 billion from 24 to 2030. So that's 30 billion of a climate action fund that will be available, or is available to all customers, including SMEs. Again, sort of at a higher macro level, we have our sustainable lending framework, which is on our website, actually, if anyone wants to view that. And that gives transparency, in the type of activities that we would consider as greener transition or in fact social for the lending process. And equally then, we also publish where we won't lend. So what's the excluded list of activities that we just won't lend to? Things like producing animal furs, deforestation, anything that adversely impacts human rights as defined by the UN. But as Dee and David have both said already, CSRD is much broader than the E, and it's really important that we focus on that social and governance side as well. So for us, and in terms of our own CSRD journey, educating and informing our colleagues has been really important, so that then we can then in turn support all customers, and particularly the SMEs, as you say. The larger corporates likely have their own advisors in terms of, you know, chief sustainability officers within the companies, but the smaller ones will need our support. And we're absolutely here to help those customers navigate that sustainability landscape, including any obligations they may have. And we do have sustainability champions and specialists in key sectors. And as you said, as a large corporate, we're obviously in scope from the 1st of January. We've learned a lot through our own process and our own challenges, and any guidance we can give to our customers, we will. So
Yeah.
look, simple guidance, not even technical guidance, Susan, but simple guidance would be to get started as early as possible, to collaborate and to communicate with all the stakeholders right from the outset, because if you have those education and knowledge sharing sessions at the start, people understand the why, and then you get that buy-in, which is so important, rather than, well, here's another regulatory directive that we must comply with. So
Right,
look, I think it's fair to say that many of our customers, and of course other businesses across the country, they've all very clear ambitions. And I think they all want to do the right thing in terms of compliance with CSRD and the broader zero emissions piece. So for us, it's about listening carefully, helping customers understand what's credible, and actually enabling them to achieve their ambitions. And I guess the macro level of the Climate Action Fund and the frameworks, plus our supportive relationship managers, will really help our customers deliver their ambitions.
And that's where I think the accountants also come in. And to David, on that topic, you know, you mentioned gathering the stakeholders together so that everybody is very clear as to the why of this and beyond just compliance. So David, when it comes to the how, you obviously spend time supporting clients in how to comply, and back to that word, with the requirements of larger organizations who may be putting out tenders, who are requiring different operational activities, or maybe in some instances requiring data to be supplied by SMEs. Do you see this as being quite a challenge for SMEs, and where do they go? Who can they ask when they're saying they know about the term CSRD, they know this is going to apply to them, they've got 100 other things on their to-do list and on their plate? So where do they go for more?
Yeah, as Donna mentioned, you know, the large companies are well taken care of in terms of, you know, they'll have internal people, the professional advisors like EY advising them on their journey and their objectives and their compliance obligations. But as you mentioned, Susan, it's the smaller companies that aren't in scope, and how do they kind of find out where they fit into it. I suppose with any of these things, and kind of any legal new challenge for a company, I always go back to the source documentation. So this is published by the European Commission, and they've delegated responsibility to formulate the SRS to the EFRAG, the European Financial Reporting Advisory Group. So they have some very good information on their website. And in fact, they published a document last week specifically on the value chain and for SMEs implementation guidance. It was published over the summer, but it was updated last week on the 15th of November. So I suppose for the people and the academics that, you know, want to read through it, there's lots of information there. The professional bodies like yourselves and other industry bodies, depending on the sector you're in. As Donna mentioned, if you owe AIB money, they'd be more than glad to talk to you in terms of the relationship managers are being skilled up in this kind of space and would be able to talk to their customers, because it's in their interest that customers hold on to their customers, because they have a sustainable business and have the profitability and be able to repay their loans. So the likes of AIB would have access to the information and would be able to assist SMEs and their customers. But I think that the best thing people can do is to control it themselves and to have their own sustainability strategy. So, okay, they're not reporting under CSRD, but if they reach out to their biggest customers and ask them what they're doing for CSRD and what are their objectives and what will they be requiring from them as their customers in the next couple of years, I think that's the best thing that they can do, is be proactive themselves. Like not everybody can afford a chief sustainability officer, but one thing you find in this space, and I'm sure you find it as well, Susan and Donna, is that there's a lot of volunteerism in this space. So, you know, you ask people to organize things that's not part of their jobs. You know, people put their heads down and they're looking at their shoes. But like when it comes to sustainability and being involved in this, there's a lot of people are really interested and want to get involved in it as part of their job. So it's something that people are willing to do. So it can be part of somebody's job and be proactive and take it on as a project and understand what are the requirements for them over the next couple of years.
That's a really, really interesting point about the volunteerism and people wanting to be part of it, because one of the pieces of advice that we always suggest people consider is setting up a green team and going to your employees and asking who would like to take this on. And there'll be a lot of energy in there where they can drive. Somebody in your team could drive something on behalf of the organization. So a lot of the leadership function then is to support those people while you're getting on with other kind of aspects of the business. Another thing that I've come across and I wanted to ask you about is the concept of peer networking as well. So you were saying, David, to people to reach out as well, to look for, be proactive in talking to their customers. But I wonder, is there also a role in small companies being proactive and talking to their peers and looking for information from business associations and their trusted advisors like the accountants?
Yeah, there's certainly a benefit in that, and you know, like you don't obviously talk to your competitors about everything, but this is one thing that you can talk to your competitors about, and I think you know everybody is looking for information and collaborating and willing to share information. So it's something that companies are willing to do in terms of sharing knowledge with other companies, especially even the larger companies helping the smaller companies. As Donna mentioned, AIB would be a year ahead of everybody else on the journey. So they would be able to bring their learnings to it. Equally, if you're supplying into a big food manufacturer, they'll be able to help. So it's not just peers, I suppose it's broader than that. And it kind of goes back to the value chain and stakeholder. Like, don't just think of, you know, kind of laterally. There's a number of places you can go in terms of getting information, whether it's, you know, your peers or your customers, your suppliers, your bank. There's lots of information out there, and everybody's doing it for the first time, so they're willing to help, I think.
In some instances, even large organizations that will have reported against NFRD are still doing this for the first time because the ESRSs are so new. And actually, that leads me on to the next question I have, which also feeds into some questions from the audience about the risks for companies in the value chain that don't embrace sustainability. But there's also maybe risks for those, or perceived risks for companies that are trying to do this. So I have two questions in, and one is about how much companies will be expected to finance this. So one of the questions is the government expecting employers to finance the cost of meeting the CSRD and ESRSs and the actions to support sustainability? For example, paying employees to cycle, maybe supplying them with bikes. I'm combining two questions together, so I'm kind of taking bits from both. But ultimately, who bears the financial burden of, for instance, supplying a bike, if that's what companies wanted to do, and the necessary insurance to commute to work? Whose responsibility is it? Is the employers, the employees, the governments? Is that a question that actually needs to be answered by companies, or is this the governments who should be answering this?
Well, the short answer is it's the company's, you know, obligation to like any costs they have to, you know, pay any kind of compliance costs, whether it's accountancy or otherwise. But what companies will do, obviously, will incentivize. If you take the example that you gave there, the employees, you know, incentivize commuting by the bike to work scheme or the travel pass and all that kind of thing. So companies will have to measure this, and there'll be metrics and targets as they go along. So like the incentives might get better as they, you know, there'll be the low hanging fruit, and then they'll want to do more and more. So I suppose it'll be an evolving space for companies, but it will be the company's responsibility to comply with it. And then, but if someone's cycling to work, that's by their own bike, but they couldn't be able to do it on the bike to work scheme. What was your other second part of that question, Susan?
I think it was back to the question of who is funding what. And is the government going to be called upon to provide funding for employers who want to engage with this? And I think maybe you've answered that it is both companies and employees who possibly are going to be sharing the cost for this through the Bike to Work scheme or through other schemes.
Yeah, like it's such a broad topic. Obviously that's a very specific thing in terms of bikes, but there's everyone forgets about the S and the G. There's social objectives, there's governance objectives, governance objectives. So it's good. It depends on what the question is, but on that specific one, we have an answer. But ultimately, companies will bear the cost. But we believe, and a lot has been kind of studies have been done in terms of sustainable companies being better companies, retaining their customers, retaining their employees. So while you might say there's a cost, there's a benefit to it, which I suppose is not really obvious from the beginning, I suppose, in terms of retaining employees, retaining talent, and retaining customers, which is what it's
pretty
about.
Key. And you mentioned actually the talent retention is a big thing there as well, because as talent attraction and retention, so the kind of perks that are often associated with joining a company like maybe a Bike to Work scheme, for instance, is something that would be both maybe socially and environmentally positive. Sorry, Donna, you wanted to come in there?
No, I was just going to say in terms of, and it was actually an earlier point that David was making in terms of the stakeholder piece, Susan, and engaging with others. And then David covered off the importance of the S, and I think we do overlook the S sometimes. But in terms of even our own assessment, it's around the community groups as well. So not to really forget about that S side in terms of our stakeholders. So when you're engaging with people who can help you on the journey, we would absolutely see community groups being a key stakeholder there as well. So that was the only thing I was going to say when David was talking about that. And certainly in terms of the cost and the financial burden, yeah, I would agree. It tends to fall to the company as well, but it's where we get to David's point, the benefit of that longer term as well. So just agreeing really with what David was saying.
And speaking of long-term benefits and maybe the flip side of that, what are the risks to SMEs that are either unable to kind of engage in the process, or maybe don't prioritize it as much as other like financial sustainability or just continuing? Do you see that there's a risk to companies that don't embrace this?
Yeah, no, I do. And sorry, David, I'm sure. In terms of Colin actually spoke earlier this week, Colin Hunt, in terms of, there's absolutely, we must do this. It's an imperative to do this, but actually there is advantage of doing it as well, and that competitive advantage and the ambition comes as well. So I guess from a regulatory perspective, you're running the risk, of course, of not complying with regulation. But by not doing it, you're going to become a laggard in all areas, whether that's a regulatory piece, your competition, your strategic ambition as well. And to David's point as well, I don't think it's going to be an option for those in the supply chain or the value chain, because we know that the larger companies will not work with suppliers further down the chain who can't demonstrate their commitment to CSRD or to net zero being the bigger picture as well. So I think it's in terms of regulatory risk, reputation risk, but also then the commerciality piece as well. Like there is commercial advantage to being a forerunner here as well.
There's certainly
sorry. The other one, of course, is access to finance. The banks have objectives to, green their loan book, albeit over, a reasonably long period of time. But, there will come a time that banks will say, we don't want your business, or investors will say, we don't want to invest in your business. Even if you're, very profitable business and you've lots of repayment capacity, great security, the banks will just say, we just don't want that business. But that will happen, over, our lifetime and, the next 10 years. So what companies will have to do will be to transition, and they'll be given, lots of time and assistance in order to do that. But if you take the commercial property sector, for example, which is, I don't know what percentage it would be of AIB's business, but it'd be a big chunk of most universal banks. loan book, there will come a time that the tenants won't want to go into a property because it's not a sustainable property, and they won't be able to get borrowings. The landlord won't be able to get borrowings on it. So finance would be the ones that I would see as being big risk, but also as the ones that Donna mentioned as well, in terms of not being able to get talent, not being able to retain your customers. So there's a couple of strands to this, I suppose.
And I would just clarify, as David said, that we will work with customers in terms of transitioning to that green piece as well. So yeah, there comes a point, but as we said, 70% of new lending by 2030. But the longer piece, we will work with the customers to make sure that we help them on it's a terrible cliche, but their transition journey.
On their journey. We hear that often, but
Yeah.
well, it is a journey though, and you do. There's bumps in the road as well on it when you hit points where you think you can't there's going to be very hard to abate emissions, say, in certain sectors, even within certain buildings. When you're operating and trying to get to net zero, it can be a real challenge. But one thing we haven't mentioned, I suppose, the government, and government is responsible for, say, 12.5% of GDP. And the amount of procurement that's done by the government is going to be very significant. And while CSRD mightn't be a play here, but certainly green tenders are. So I've been hearing anecdotally that certain tenders are no longer being accepted, both for government and for the private sector, because of non-compliance. And you mentioned, Donna, that you will work with clients and to make sure that the people obviously aren't just cut off without due notice. But are you hearing this from customers, from clients, that they are worried about losing contracts?
I haven't heard it directly, Susan, but it makes sense.
Mm-hmm.
It makes complete sense as to what you said. David might have a better view because he's a broader role, but I couldn't say I've heard it myself here.
No, just like yourself, Susan, just anecdotally, but obviously, professional services, whether they're legal or engineering or accountancy, as part of tenders, this will be part of the process, and they will ask these questions. So, the idea in tender processes is to get into the room. So you just won't be in the room in the shortlist if you haven't identified these issues. If you're just ignoring these things as part of your tender. So it's very much on the radar.
And I can imagine that companies will be getting many different types of questionnaires as well. So the temptation to not so much to ignore, but just to become completely overwhelmed by this is another factor. Because I'm thinking of Chartered Accountants Ireland as an SME, and we have premises in Dublin City, and we also have one in Belfast. But I imagine there's other SMEs like us in their profile that will be getting a lot of questionnaires from companies in scope, certainly as the years go by. So do you think there's a risk that a small, say, a courier company, for instance, may be facing 100 different questionnaires from 100 different clients, each slightly different, that they will have to then somehow manage to grapple with on top of doing all of their daily business? And is there some way that these SMEs can be supported in that?
Will I take that one?
I was just going to say it's certainly a challenge I should have thought of as well in terms of the first question, David, in that, and you will absolutely be able to expand on this more than I, but in terms of, it depends on what the material topics are for each organisation. So, our material topics may be different to another organisation to another. And if that one person is dealing with all of us, then yes, I could see where that would be a real complexity for someone further down the chain. But David, I'll let you answer on a more technical basis, I'm sure.
Yeah, and that's broadly it, Donna and Susan, in terms of, you're supplying to 100 companies. They're all large companies in scope of CSRD. They will have different material topics, so they will be going out and asking their stakeholders different questions. But if you're a small SME, like a courier company, the example, like, there is going to be an 80-20 rule here. If you've got 10,000 suppliers, you're not going to be going out to 10,000 suppliers. You're going to go out maybe to your top 100, the top 200. The other thing is if you're supplying very similar companies, they're going to have very similar material topics. So if you're think of it in an industry example, if you're a supplier of timber, but all you do is supply to furniture manufacturers, those furniture manufacturers are going to have broadly the same kind of material topics. But it kind of goes back to kind of something I said earlier, Susan. Like, don't wait for the surveys to come in. If you can be proactive about it yourself and know what are your issues and be confident in terms of the data that you're collecting, you should be well set up. The other thing is there's a 3-year transition period. So for the value chain, so companies that are reporting don't have to report fully on the value chain for the first 3 years. So if you're reporting in 2025 or 2024 financial year, it's like 24, 25, 26. You're into 27 before you're reporting on the value chain. So it kind of goes back to what Donna was saying a couple of minutes ago. Like, large companies will be working with small companies to ensure that they're going to be able to comply with whatever the relationship might be. So that value chain is not a hard date that's coming when CSRD is coming. There's that 3-year phase-in period as well.
Yeah, and actually you mentioned technical there. This is a nice segue into my last question, which is a technical question and also feeds into the idea of are there templates, are there things that can be asked? It was a question that the CSRD requires, the XBRL tag data for the report. And are there software packages like this that help with the creation of the CSRD reports yet? And are they the same ones? They're the same as the ones used in the financial industry. I think this might be the $1 million question, because I think there aren't right now. Right now there are providers, but I don't know. Have you experience of this? Is it something you can or would like to talk about?
I just might take that one, Susan, if that's okay. So there are a couple of software providers who are doing it at the moment. There is an older reg called the European Single Electronic Format, which was brought in for very large companies a couple of years ago, and that they have to electronically tag their financial statements at the moment. There have been a lot of issues with it, and I think they are being worked through. We certainly need to see more providers in the market before this becomes mainstream for the CSRD. In short, yes, there are, I think between Ireland and the UK, there are two companies that do it at the moment. It is still, I would say, a fairly, it's still really at a very basic level. So, at the moment, what a lot of companies are doing is they're taking the PDF of their financial statements and then they're sending it to a software provider. But I think over the next couple of years, we will see that moving, and that there will be a lot more providers into the market, and we'll also see the technology moving for it.
Thank you. There certainly seems to be a lot of people offering software as well for the capture of data before it even gets to be reported. Yeah, I've certainly noticed. Donna, did you want to come in on that, or Dave?
No, not at all. No,
okay.
No, thank you.
Well, thank you very much for that. I think it's 10 to the hour now, and I think it is a good opportunity to wrap up the webinar and give people the time that's needed to get to the next thing at 11 o'clock. But I wanted to take the opportunity to thank our presenter and panelists so much. It's been a fantastic session. There's been a lot of takeaways from that. And as I mentioned at the top of the webinar, the session is recorded. The recording is available, or will be made available shortly on the Climate Finance Week Ireland website and also on the Chartered Accountants Ireland website. There are resources available as well, which we will include, that Dee has included in her slide deck, and those will be also made available. And I just want to thank you very much again. It's been a pleasure to host this webinar, and enjoy the rest of the week.
Thank you, Susan. Thanks, everyone.
Thanks, Susan. Thank you.
You.
Bye.
Bye.
Bye.